And we are live. My screen doesn't tell me there's anyone on here yet. Ah, we have somebody. Cool. Hi everyone, hope y'all doing well tonight. We'll wait a couple minutes or at least a minute or so just to see if we can get more people in the chat and join the room, and then we'll take it from there. Who's in the chat today? Just let me know who's here. Name, location, maybe. Let's talk. Let's get to know each other a little bit. Y'all aren't talking to me? I saw I had a question in here already. I don't know if I should just respond in text or respond now, but I'm probably not the best person to ask about cryptocurrency. I could probably go over the charts because charts are basically reflections of human reaction to price movement. So you can kind of pull up any chart and I can give you my opinion because I have a lot of history on charts. But as far as the individual cryptocurrencies, like the different coins and stuff, I don't really follow them individually, fundamentally. So I don't think I'm not very well equipped to have an opinion outside of Bitcoin, really. So I wouldn't feel good. I could analyze a chart for you, but I couldn't really tell you what are my favorite cryptocurrencies because I don't know their competitive advantages compared to the next. Like when you talk to, if you listen to Warren Buffett, he always says that when he's evaluating a business, one of the most important things you have to have besides good management is you have to have a moat, which is some type of competitive advantage in your market. And I don't know the currencies enough, the cryptocurrencies enough to know what the competitive advantage for the different ones are, other than Bitcoin and its inherent advantage of being kind of the first. So I couldn't give you really good fundamental advice. So that'd be kind of I'd just be talking a lot of noise that probably doesn't mean anything and probably would get you in trouble. So I'll stay away from that question. Okay. Well, I mean, we look about average for how it's gone. And so the floor is open. I don't have a plan when I come on these videos. I don't really have a plan as far as, when I make my videos, sometimes as I'm making the video, I don't even really do notes anymore. I'll get on the video, and trading is so easy for me. To talk about trading is easy for me, I should say, that I just get on the video and I talk. But on here, I don't have a format. I'm at your whim. So you tell me what you want me to look at, and we'll put two heads together and we'll look at it. So I'm waiting for you guys to tell me which chart you want me to pull up. The floor is anybody's. Okay, not a lot of activity. All right, well, let's kill some time. Let's look at the S&P while we're waiting. It's always a fun exercise. Let's go to my trading chart and take a look at it on that. All right, so as I look at this chart, not that you asked, but I'm going to tell you now. These red lines represent monthly resistance as I define it. The blue lines are weekly resistance and are basically what I deem as the polarity for the weekly chart, because this is a daily chart. So typically, if the polarity on a weekly chart is up, your daily movements should be up. So what the lines mean, and this is just a historic deal. Let me get my drawing tool out. So in theory, if the polarity is up, that means that your moves up are going to be larger than your moves backwards. So it's really as simple as, if this is the move backwards is going to stop short of going all the way down here. Because if the polarity is truly up, then your up move should be larger than your down move. So in this example here, if the green line went all the way back to where the move started, or below it, that would invalidate that. So typically what a market's going to do is come down to here, and then you're going to get a bounce, you know. But where it can get tricky is, this is monthly resistance and this is weekly support. So what happens when price, you know, there's always multiple things happening at the same time. So when it comes down here, let's say it bounces here, right? But now you've got resistance here. So which way do you trade, right? And then if you come down here, there's resistance off that down move. And then there's resistance here. And then there's resistance here. And then there's resistance here. And there's resistance here. And then there's resistance there. And that's how consolidation happens. You know? And what happens is, out of that move, somebody wins, and you typically get an explosive move up or down. And normally, the higher energy or the longer time frame is typically the direction that wins. So, you know, you can kind of prioritize which one you should put more importance on. So like, if this was going to trade textbook, it typically would come up to here, bounce down to here, come up to about 60 to 80% of a retracement of this move that stopped here. So stop here and then continue further down and break the low. That's textbook pattern. The market's anything but textbook most of the time, but you know, that's what the textbook version of it looks like. So my outlook on S&P is pretty much the same. We're at resistance area monthly. Candle bodies are getting really, really small. I said last week, or Monday actually, when I put the weekly video out, that when the resistance lines that were here last week moved down here and became support, that typically price doesn't reverse underneath the monthly resistance when the weekly resistance changes into support. And I don't have any type of statistic for that. That's just my experience in the market. That's what happens. So I said on Monday that I wouldn't be surprised if there was a push and pierce into this level. Plus, a lot of the charts turned bullish last week and over the last couple of weeks. So there's definitely a lot of buying pressure in the market, you know. But it's easy when you look at my charts because these lines are here. But if you look at, you know, most people's charts don't have these lines here. Let me pull up some of my other charts, and you'll be surprised how price adheres. I really don't want to go through these yellow ones because they're going to kind of tell you, kind of lead you a little bit. But I mean, take a look at, these are the charts that I use to trade off of, right? So the blue lines are there for support. This was monthly resistance. It was already there. Look where price stops. I mean, you can just kind of, here's the monthly resistance on Goldman Sachs. Look where price stopped. This one's fresh. This is monthly resistance on Southwest Airlines. Look where price is stopping. This is a different kind of trade. That's not going to be very beneficial. But if you go through my charts, it's almost, what's the word I'm looking for? Not ironic, but, well, I don't know the right word right now. But you can see how price abides by the lines. And the way that I trade is when price isn't near the reaction areas, I just ignore them because you have low probability trades. When you're trading in the middle of the range, like where Apple is now, since October, I've taken one trade on Apple and I lost the trade. So it hasn't moved very well. No, I digress. I took two trades, and one of them I won, one of them I lost. So I'm still waiting for you guys to tell me which charts you want me to pull up. Because I can just log up here and we can talk, but I don't know what you want me to talk about. I only do these videos for you to tell me what you want me to tell you, if it matters. And if you're tuned in, then maybe it matters. So, but yeah, these are my charts, and you can notice that there are reactions at these zones, and you can see that every one of my charts is marked up. I don't have any scanners. I am the scanner. I am the screener. So I manually go through these charts every day, and I tag them, yellow, red, or blue. And the blue trades are the ones that I'm actively in. The red trades are the ones that I have crossed a level that signifies that I should get in. So I put an order in, a limit order. And then the yellow is kind of like my high alert watch list. And then everything else just doesn't qualify. That's not tagged. So pretty much what we do. Is no one really gonna give me a chart to pull up? You guys are hurting my feelings here. Give me something. But as I'm scrolling through my charts, you can see that the price levels do matter. And this iRobot is interesting. I got the same setup on Home Depot, and I think I had the same setup on Chesapeake Oil. Chesapeake Oil, or Chesapeake Energy, kicks my butt every time I try and trade it. I think I'm 0 for 4 or 5 since last year trying to trade that stock. It just doesn't like me. So if I ever come on one of these videos and you ask me to evaluate that chart and I give you some type of advice, do the opposite of whatever I tell you, and you should win your trade, because I can't win at that stock. I don't know why. It took my money again today. But it had a similar setup like this where we went sideways, and it was in a consolidation all last week. And the consolidation lasted so long that when there was kind of a breakout to the upside, it actually put in a support, a floor support, but it's kind of close to monthly resistance. And I don't like this setup, but I'm one of those people that you trade your rules. I have rules to how I trade, and there's a historical performance that my trading setup produces. So you trade your rules. You don't switch it up because you don't like it. So if it's invalidated for some reason, then that's one thing. But if it's a legitimate setup, you trade it, because if you don't take all the trades, then you're gonna throw your proposed winning percentage out of whack. I think that's one of the things that really hurts early traders the most, is your inconsistency. Because what happens is, when you lose a trade or two, and this is why trading, so yeah, let's talk. So when you're trading, it's really, really important to trade with the proper position size, okay? Because it's not just because, let's see, if you have a system that's going to be, your wins are going to be 2 times as big as your losses, and you're going to lose 50% of the time, that's a profitable trading strategy. But here's the problem. If you're risking too much on every trade, you won't be able to take the next trade if you lose 3 in a row. And for that system to work, you have to take all the trades, because your 50%, the lower your win rate is, the higher probability that you're going to have multiple losses in a row. So like a 90% accurate system is not going to be wrong 5 times in a row. You probably have a 1% chance of that happening. But if you have a 50-50 trading strategy, you could lose 5 in a row. So what's the point? Well, the point is, let's say you're supposed to take 10 trades. You get 10 setups, and you should take those 10 trades. You lose the first 3. You were risking 3 or 4% on each trade. I mean, you're down 10, 11, 12%. Now you don't take the next 3 trades, or you skip 3, and then you come back the next day and you take 2 more trades, and they're all losers. Well, you lost 5 trades, but it's not because 5 of all of those trades were supposed to be losers per se. It's just you didn't take the 3 winners in the middle while you were sulking over your losses. So the best thing to do is to determine, like what I show you on here with price levels and this kind of stuff, as far as trend lines and time to mark and weekly and monthly support. This is like one quarter of of the success, or 1/4 of the information that you need for success. A good trading plan is just a small piece of the pie. You have to have good trading psychology, which is probably the most important thing, and then you have to have strong money management. Institutional level traders, it's robotic. That's why they use algorithms. You don't want your emotions to tell you what to do. When your setups come, you take them, and when you lose, and you control your losses, and then you tweak your system to get your risk reward and your profit versus loss, your win versus loss rate intact. Those things go hand in hand. So like typically, if you have a 2-to-1 risk reward strategy, meaning your wins are 2 times the size of your losses, that's going to have a lower winning percentage most likely than a system that's a 1-to-1, where your wins and your losses are the same size. You could take those trades all day, and you can find them. You'll have a higher winning percentage, but you're not making as much money. You're risking 1%, you're making 1%, right? So you could be right 70% of the time with a good strategy, 80% of the time if you find a good strategy. And that's a good way to go. I don't like that strategy because it's slow. You spend the day and you take 4 trades and you win 2, you lose 2, then you're at 0 and it feels like a waste of time. I like the 2-to-1 thing. My 2-to-1 trades typically turn out to be about a 1.8. That's my average, about 1.8 risk reward. So if I'm risking 1%, I typically make 1.8 on a win. So with that kind of a strategy, I only have to be right around 40% of the time to still be profitable. And it keeps it so that if I have a trade where I win and a trade that I lose, you still make money even at 50-50. So that's better for my psyche, and that's why it's that way. It's because of my psyche. It's not really because the math is going to take care of itself. Even if you're risking 3, 4, 5% a trade, if you have a system that's 50% accurate and your wins are double the size of your losses, I mean, you'd have to lose a lot in a row. If you're risking, let's say, if you're risking 5%, you have to lose 20 in a row to blow your account. But the math will work itself out. It's just psychologically, are you still going to be able to pull the trigger when you keep losing trades? And most people can't. And then you revenge trade, and then you risk more than you're supposed to, and then it gets bad. You get out of whack. Wow, I'm not really used to this. Every week we've had people telling us which charts to look at, and no one's telling me what to look at. All right, well, let's go through a trade. Let's make up a trade and give an example. I don't know if that's the wisest thing to do, but we'll do that because I don't want to waste anybody's time. All right, let's tie in what I was just talking about as far as money management and everything else. Okay, so let's just grab a random chart. Let's get a clean chart. All right, so this looks like something I would trade right here. All right, so this section right here, I like time to mark trend lines. You can't see it, but there's a higher high over here somewhere, and it would have come across here. So this would have told you that the stronger move in the direction was up here at this juncture. All right, so if I would have measured this move, typically price. So I'm going to say that this up move here broke a trend of going down, which actually started right here, because the market's just full of different directional trends. Hold on, let me turn the magnet off. All right, so this is one wave doesn't make a trend, but when the polarity of the direction changes, like this is a matter of days. 1, 2, 3. It's 3 days, and then you had some consolidation, and you reversed here. So, but this does constitute a trend. It's a short-term trend, but if you were to zoom in on a 15-minute chart, this looks like a really nice-sized trend right here. All right. So when the price broke to the other side of that and then made a new high, the polarity for this period of time has gone to up. All right. So let's say I wanted to trade this. So if I was looking for a deep retracement to enter into this market, typically price reverses around 60 to 80% of the move at the of a retracement, right? So that's what Fibonacci is for. People get kind of twisted up in Fibonacci like it's magical voodoo science and stuff, but it's really all it is just a ruler that measures the distance that price is moving against the move that went the opposite direction. That's all it's measuring. So from $279.16 to $285.97, you know, the 23% retracement is just a 23% pullback. So typically what you find is that markets bottom out if they're going to turn, and sometimes you're wrong about whether they're going to turn or not. That's where knowing the polarity and where you are in the general scope of the big picture of price is important. But typically you're going to reverse 60 to 80% of a retracement. Otherwise, that invalidates the whole point. If you think the direction's up, it's not going to go all the way down here. You know, that's what up means. Up means, you know, 3 steps forward, 2 steps back, right? So you're betting on that. You're putting the odds in your favor when you try and do this. So let's say that I wanted to buy, and I'm going to show you how I do my money management. So if I decided I was going to buy this, and you know, there's a lot of ways you could do this. You could drop down to a lower time frame chart and look for polarity changes. Like these are daily candles, so I could go down to a 15-minute chart and I could wait for some type of polarity reversal down, you know, around the 78% retracement or somewhere between, you know, 61 and 78 or at here. Let's just go in the middle. Let's say I'm gonna put a random line here. So let's say I'm gonna put the line here. All right, so let's see, that's 70. So I do a lot of math, so I'm not going to try and bore you guys with that while I'm on this video. But let's see, that's 80, 62 to 76. So that's 104, 100 and, I'm not sure I have bad math. It's 114. So that divided by 2 would be 57. So let's just say I'm going to put this at 80, 57. Is that right? No, 57 would be, sorry about the bad math. Hold on. 81.19. All right, so if I'm going to put and I am to the penny. I use a calculator when no one's here though, right? So let's say that I'm going to enter my trade right here at 81.19. So how does Jason determine how I'm going to position size and protect myself from having bad psychological whatever or all that good stuff? Well, first thing I do is I track all of my trades. I track every single trade that I take, and they're numbered. So I have 10 different trade setups, and the different trade setups have different, I check all their probabilities, and I track, you know, and I keep records. All right, so the first thing I'm going to do is identify what kind of trade it is. All right, now because I track all my trades, I know around about, the market moves in cycles. So sometimes you've had breakouts, and I have a type 1 trade, which is basically an end of a breakout trade. Like after the breakout's over, you know, the first turn or the top or the bottom of the trend, right? I call those pretty good. As a matter of fact, I'm 8-0 in 2019 on calling those. So, which is not normal, by the way. So I'm on I guess a little lucky streak there. But typically, what happens is, so I'm gonna look at this and I'm gonna say, well, I think the way the market's working for me during this period of time, it's best if I have, you know, maybe I have 5 slots open to have 5 trades open at a time, or 8 trades open at a time, or 6. So I pick a number of how many trades at a time I want to have open. Now I'm never going to risk more than 1%, but I'm going to show you this tool that I created for myself. All right, so I'm going to get in at 281.19. All right, that's going to be my number. So I'm going to go down. Well, that's not really exactly accurate. All right, so let's say I'm gonna give you guys another one of my tricks. You know what? I'm gonna give you one of my trade types right now. I was trying to be generic. I don't know how to be generic. We're gonna give you a real trade type. All right. So I typically in this situation, I would look to buy around the 78.6 on this type of trade. 280.62. All right. So I'm gonna put my line there at 280.62. All right. So if I'm assuming that I'm buying there, I always measure what is the price that says I'm wrong. All right. So I'm going to put my fib as if it was going to land on 280.62. So that's my entry price, right? So That's what I'm going to do. All right. So then I'm going to say, so 283.95 is the 61% retracement, right? So what I'm going to do, I'm giving you guys all my secrets. All right. So what I'm going to do is I'm going to subtract 283.95. Well, I'm going to subtract 280.62 from 283.95. That's going to give me $3.33. All right. So if I'm wrong about, and I can show you an example of how this works, but if I'm wrong, let's say that I'm measuring this move up and I'm looking to buy here, and if I'm wrong about that and this was just the first leg of a down move, typically what's going to happen is price will come down here to my level. It'll bounce somewhere between the 60 and the 80% retracement. It'll come back up, and then it will fail between the 60 or 80% retracement of the way back up, right? So this is kind of like the price that says I'm wrong. So this is important, 283.95. So what I've done is I've measured where my entry is and where I'm wrong is. And that's $3.33. All right, so I'm going to divide that by 2. And this equals my stop loss. And I'm going to round that up to 167. Now let me show you something pretty impressive about 167. 167 is going to land directly below this low right here. And mathematically, it always does. All right, see that? So that's, and my mouse is a little sensitive, but there's 164. I'm right below that low. All right, so I'm below the low. I've got a 2-to-1 risk reward now because my stop is here at 167, which is half of my target of 333. All right. I'm only doing this because there's only 7 people on the stream. Yeah. So I hope you guys are taking notes. So then I go to this chart here. So I created this chart, and what this is like a position sizing chart that I use. And when I traded foreign exchange, it was a lot easier, but I always use some type of chart like this. All right. So what this multiplier does is it tells me how many positions I want to have open at a time. So if it's at a time of year there's not a lot of volatility in the market or whatever, I could change this to 1-to-1, which means I'm going to be risking. I can only have 2 open trades at a time. It's going to use, because I'm using 2-to-1 margin, so it's going to allow me to have 2 trades open, right? And the only reason I could do that is because I have margin. If I didn't have margin, it would just be 1-to-1. That's what the multiplier is for. So typically, I like to have 4. I have to have a 4 multiplier because I like to have available 8 trades that I could take. All right, but let's drop it down to 2. So that means I can have 4 available trades with the amount of margin that I have. Now I have all the formulas already calculated in. So let's go back. So my entry price is 280.62, right? Which is important. And then what was my stop loss? 167. All right, so there's a lot of information that gets passed here. First, I will be risking $297 on this trade because to have 4 trades just like it open at the same time, I can only use 25% of my buying power, which in this case, based on a $100,000 account, is $25,000, which will only allow me to buy 178 shares. And I'm risking 0.3%. You have to move the decimal point twice. So it's 0.3% on the trade. All right. So the upside of this trade is roughly, close to $600. The downside is $297. And what this does for me is I can have 4 trades open just like this at the same time, risking 0.3%, which means at total, for all my positions, I would have 1.2% risk on the table for a 2.4% upside. I can deal with that stretched over 4 trades, and I could always drop it down to 1 and risk more, I think I could drop it to 0.5. Yeah, I could drop it to 0.5, and that's risking over 1%. I can change this to whatever I want to change it to. But the thing about it, the part that I was talking about psychologically, it is much better to trade, I think, more trades with lower risk if you're not as confident in what you're doing. And it eases your mind and it keeps you consistent and you need a robotic and systematic approach to this, right? So when I enter these numbers in here, I don't blink. I need 178 shares and I had a $100.67 stop loss. So if I'm going to go into this deal and I'm buying and I'm going to put my limit order in and I'm going to say 260.82. I'm buying, how many shares did it tell us to buy? 178 shares. And my stop loss is 167. And there's my 297 risk. And here, like 283.90, 283.95. That was the exit, right? That's not right. 283. What did I do wrong? Sorry, I wrote the wrong thing. Hold on. I messed that up. Crap. Price 283.95. Is that right? Oh, I'm sorry. Yeah, it's judged on the. It's based on where the current price of the market is. Sorry, we went back on the chart. But if you did the math, it's going to be double 297.26. Maybe a little bit off because we rounded up the stop loss, so it's going to snatch away, and that's why I don't land with 2.2 to 1 risk reward all the time. I start out with 2 to 1 risk reward on every trade at least, but based on how far the market goes down, based on how far, sometimes I don't exit here. I have different exits based on how far the market comes down. This is where it gets kind of complicated in my actual trading strategy, but you get the general gist of it. Going into the trade, you kind of are sizing your position and determining where your exit is before you even enter the trade. And I don't like to predict the market. Now, this is a reaction play. Markets typically have reactions 60 to 80% of a retracement going the opposite direction of polarity. It's a high probability that happens. Now, it doesn't always come back up and make a new high. You're in this case, the trend would have continued, and I would have been out on this candle right here, so I would have missed all this upward movement. That's okay. That's why I watch 80 different stocks, and what happens is you'll get correlation between multiple different pairs, and you'll take the same trade on 3 different stocks. And what's unique about that is sometimes 2 of them will be winners and 1 of them will be a loser, and they're the exact same setup in the exact same sectors or whatever. It's just different stocks trade different ways, and they're 90% correlated or 80% correlated. So it's the same direction and it looks the same, but it doesn't perform exactly the same. And that's why it's good to diversify across multiple stocks so that you limit your risk. Everything's about risk management, and your money management and risk management is more important than your trading strategy. All trading strategies work sometimes. None of them work all the time. So you're always going to have losses, and it's a matter of managing your losses and your money more than anything else. And you can trade I don't have a really good breakout trading strategy. I follow a couple people online that have really good trading strategies that trade breakouts, and I'm pretty sure with all my chart time I could quickly come up with some type of momentum play, but it's unnecessary. I'm accurate 65% of the time. Not last month, it was around 57, 58 last month, but 65% accuracy. My wins are about 1.8 times the size of my losers. I can turn out really high double-digit months with that, and that's good enough for me, and I'm comfortable. But if I wanted to add a momentum play to it, I could probably learn to stretch that out. But that's why you track your results, because you can always tweak. Some of my trades, I am looking at 2 of my types of trades right now that I want to see how they perform in the long term. As a matter of fact, let's pull up my performance for the month, or 2019 so far. Oops. That's wrong. Hold on. All right. So here's my 2019 performance so far. And this is, I didn't update the date when I did this earlier today. What is today? The 6th? Yeah. All right. So, really, dude? Okay, so there's a lot of information here. This is the counter trend trade that I was telling you about. This typically has around a 55-ish percent accuracy or win rate, and this year it's 8-0. Right, so these are the trades that have these are the biggest trades. They have the largest stop losses, and they're typically the most at risk. As far as I never risk more than 1%, but they have the most, like 0.8, 0.9, or 1% a lot of the times, especially the number 5 trade typically gets me up to 1% risk. And historically, these are the trades that have the best performance for me, percentage wise. And these would be more in line with what you hear whenever you talk about trading. Buy the dip, sell the rally, the trend is your friend. These are typically trend following trades. And the market over the last, I'd say since November, has been doing really funny stuff. When you're a person that watches the market wave to wave and manages things from wave to wave, you really pick up a lot of nuance within the market. And what I've discovered is that, they know that people buy the dips and sell the rallies, and the market's doing the opposite a lot, which is why it's so important to use dynamic tools that don't get you trapped into bad trades. And but I'm not exempt. These trade types here typically now 38% is getting close to a break even. Because like I told you, my wins are about 1.8 times the size of my losses. So around 38%, I'm close to break even. So one of my historically best trend trades is at break even this year. And this trade here is doing a little bit better. But then look how I picked up on the other trades. I have one loss among the rest of my trade types. And that's where the profit's been made this year. And I fully expect the market to, and it's kind of expected because the market did something that it hadn't done since the 1930s in December. That was the worst month that we've had since the 1930s, and there was no rhyme or reason. It was pure capitulation in the market, especially around Christmas. That was just a sell-off. Technicals didn't matter. I don't know if fundamentals mattered. Everybody just wanted out, so everyone was jumping out, and nothing seemed to matter there. But the reversals, I bought all of those going back the other way, and they were all winners, and that's how it works sometimes. But when you get capitulation like we had in January, you have a once in a every 80 or 90 year type of a move. The reactions afterwards are going to be similarly, I guess, unique and not normal. So I don't think we're going to get into normal market action probably till later in the year. It's going to be a little crazy until we kind of get into the regular flow of the market. But then there's always going to be some type of fundamental thing that happens that disrupts that, whether it's Trump and whatever we decide with China. Our bond market is, guys, you also should really pay attention to our financial situation. Ray Dalio, if you don't listen to him, maybe Google him and kind of look at what's going on, because like our interest rates not being raised is really problematic when you've gone through a round of quantitative easing and the government starts buying assets, and the financial segment gets rich off the assets, but the normal people don't, and 0.1% of the population is holding 90% of the wealth. Like it's that combined with our market not having much room to change interest rates. That's what we normally do is we lower interest rates to stimulate market growth. And with our interest rates so low, we don't really have that option. And we just went through a round of quantitative easing buying, which is supposed to stimulate the market too. And so it's elongated this run that we're on, but we don't have any more options left. So when the crash does start to come, how do we stop it is the problem. And it should be a major concern. And if you're in the stock market, I think the volatility is going to be kind of insane. So I don't know exactly how I'm going to trade it, because I started trading right into 2008, and I was kind of still paper trading a little bit back then, and I wasn't all the way full time. So I didn't know what I was doing anyway, so I was losing money regardless. But I don't know how I'm going to trade the market when it comes, because I don't have a great trend strategy per se. I'll end up on the sidelines a lot. I won't lose money, but I won't make a lot of money because I don't really momentum trade. But I think we're going to have some serious issues whenever this thing starts to go back down. So I'm kind of hoping it doesn't go down anytime soon, so we can kind of just get back to a normal market maybe for a year or two before anything happens. But it doesn't look really good. So, yeah, but I don't know how I got off on that. But that's the different trade types. I think tracking your trades and the type of trades that you take is really important, because you want statistical data to kind of inform you on what you think you should do next. And it's just better to have it. Like I'm looking at this. 28% of my trades have been counter trend. I define the trend as I use the weekly direction as my base, as my trend direction, but I use the monthly direction if we've reached a monthly level. So I'm always with the higher energy time frame trend. And this is another reason why I don't like to. I consider giving trade advice on the channel once or twice, but the problem is, look at my wins and losses, right? So this isn't a typical month. I mean, I to be honest, sometimes I float around 70%. So it's been really ugly trading since November. It's hard. This is a really, really difficult market to trade, but it's still profitable like it is. But I can lose 4 trades in a row, especially the way that I trade, because my winners take longer to produce them, to reveal themselves than my losers do. My losers, when I'm wrong, I find out fast. So if I enter into like 5 different trades and 2 of them are going to be winners and 3 of them are going to be losers, I lose the 3 first most of the time before I win the 2. And the problem with that strategy, and if I was to give you advice, is if I said, hey, look, I like this, I like this, I like that, what if the ones that I gave you were the losers? And out of 39 trades, or let's not count the 2 break-even trades, but out of 37 trades, 16 of them are losers. So there's a possibility in there that I could give you 3 trades and all 3 of them would be losing trades, where the system is designed for you to take all of the trades, and I could give you my highest quality setup, which would be a 6 or a 5, and thinking, hey, I just gave you, a free good trade to build some goodwill. And, you could call me and cuss me out on the next live session because that trade didn't pan out. So to be a trader is to develop a system and trade the system objectively and systematically over time, not just any one trade. And there are people out there that make money just on hitting home runs, and you can do that. But the problem is, like, one popular strategy is a lot of people trade small cap stocks and they trade breakouts, and that's a really good strategy. But the problem with that is you can't scale that to a really large account. So another thing that's important is to pay attention to the volume. So let's take Johnson & Johnson, for example. So if their average volume is 8 million shares a day and the stock is $133, that's a little over $1 billion that's being traded. Well, 1% of 8 million would be what, 80,000, right? So if you're trading 80,000 shares of Johnson & Johnson and you're only looking for a 10-cent move, I'm just making numbers up, but once you got to $1 million or $2 or $3 or $5 million account, whatever the math is, you're going to start to affect the price of the stock. And when you're trading small cap stocks, you're not going to be able to grow your account but so big before when you enter your order it collapses or runs the entire stock, and so it's just the ceiling gets lower on you. So if you plan on trading a small account forever, then it works no problem. But if you're going to scale into something large, like I ultimately want to have, I don't want to speak in specific numbers, but it's, an 8-digit account that I trade, so I'm building my system for the long haul systematically. And the system that I'm using now, I've done the math. I think I could scale it up to about 30 million, give or take, without having to change much. I wouldn't, other than getting, block trades, you have to call the broker and get block trade account set up. But other than that, and some type of direct connection, ECN or whatever. But other than that, I could trade it from home still that way. So I'm kind of playing the long game, and that's more of an institutional way to trade, and that's how pros trade. They track their results. They, you manage your position sizes, and you take every trade objectively. And over time, it's just like when you go to Vegas, all the games are stacked against you. So it doesn't matter if 1 or 2 people hit the jackpot, because overall, 80-90% of the people in there are losing money. And so no one trade matters, So it's the same scenario. I think we've been going for 45 minutes. No one's giving me a video, and no one's giving me a stock to look at. No one's talking to me. So wait a minute, people are talking. Wow. Matt, hey, how you doing? Wow, I feel bad now because there were people here the whole time. I don't have 2 screens because I'm out of the country. So I'm working on kind of like a mobile setup, and yeah, it's kind of. So I use my phone for the chat, and none of your chat information showed up in the chat box. Oh, there it is. Okay. All right, so I wasted a lot of you guys' time. Sorry about that. Let's get through this. Minnesota, what's your opinion where Bitcoin will be in the next 10 years? Bitcoin. All right, so I did a video. I said I wasn't going to talk about it anymore. Colin, if you're still up here, go to my video that I made on Saturday. But just to tie it up, I think Bitcoin has a giant use case. I just think Bitcoin spits in the face of government and the established order, which is problematic. So Bitcoin is kind of like a uncontrollable deal, but I think Bitcoin has to have a need. And the downturn that's going to happen soon, our market, I did this on the video that I just told you to watch on Saturday. I think it's called Crash Imminent Buy Bitcoin ? Check that video out. I did it on Saturday, and I really dig into what I think about Bitcoin. Now, I didn't go for a 10-year horizon, but what I will say is if we back out to a monthly chart and look at the S&P, and you look at this gigantic run that we're on from here, started in 2009 to here, this kind of, let's draw a trend line. All right, so you had this trend going, and that was broken, right? And I know that's not exact for trend line folks, and then you had this one going, and it broke. So you could say that, this is just another break like this. We're going to consolidate, and we're going to continue up, which could be true. But the fact that we're in a 10-year run and this is a 20% drop, and the last time we had a 20% drop was here, which was the crash in 2008. And that's just the first leg. Right here to right here was 20. And this move here, from right here to right here, is 20%. So I think we're going to get the major correction for this run right here, okay? And that puts, price coming down here, and these corrections normally last a year or a year and a half or something like that. Why does that matter to Bitcoin? Well, I think that's important for Bitcoin because people look for alternatives to invest in. And the market's been going straight up like this. People have gotten pretty, used to these types of returns. And you can go to gold and you can find blue chip stocks. You could go diversify into bonds and find some low yield stuff. But there's a percentage of the money that's going to exit the market. Remember, the market has a supreme buy bias. Most people are buying stocks that they think are going to raise in value. Not a lot of people are active traders that are going to short a stock. So when they exit the market, they're going to look for other markets to buy something in. Bitcoin's chart is interesting because let's pull Bitcoin's chart up. Bitcoin, wow, is that a line? Bitcoin went up to 20,000, right? And we've retraced and we've consolidated and we're stuck here. Well, all it takes is a percentage of the billions of dollars that exit the stock market looking for something with upside to enter into Bitcoin, have the trend lines break, have it, start to push up again. And we've done this with Bitcoin 3 or 4 times, and there's going to be a bunch of people that jump in to buy it. And I think the difference between the last 4 times that Bitcoin mooned, the difference this time is going to be that the stock market is not there to be the fallback as it's been before. If we're in the middle of what I would call a healthy, correction, because I mean, markets shouldn't go up this far this long. It should correct down to get the price closer to a mean and come back up. Well, during that time, people are going to flood that money into different assets. And up until this point, you could invest in Bitcoin, but you could always come back to the market and catch some more of this run up. Well, with that changing, I think there's going to be a lot more serious attention paid to Bitcoin. And I think that also the fact that there will probably be a Bitcoin ETF by that time is going to put institutional players in the market to purchase Bitcoin. And Bitcoin's baseline price rises every time it does what it does every three or 4 years or whatever, when it goes parabolic. So like we have a 4,000 floor Bitcoin this time, or $3,000 floor Bitcoin now. We might get a, I don't know, $10,000 floor Bitcoin or $20,000. And I think the longer Bitcoin exists, the more it can really represent digital gold in the minds of the people. Like, we don't, do you realize we don't have the argument as much as what is Bitcoin anymore? People know what Bitcoin is now. And it's not so much it's a fraud. Maybe that's, instead of 90% of the people saying it's a fraud, like Jamie Dimon and, the like, maybe only 40 or 50% say it's a fraud now. And then the next time we do this thing and it goes up to $10,000 and that's the new floor, then, there's going to be less and less people that are fighting on whether or not it's valid or not. It will just become a normal asset class like anything else. And once that happens, the advantage that it has over gold will resemble itself. I don't think Bitcoin is ever going to be currency. I think it's digital gold. So its market cap potential, I think, is gold, 2.0. And I think it can be better than gold, because, if you own gold right now, and I tell you, hey man, can I have $1,000 for an investment, and you own $10,000 in gold, how are you going to give me your gold? You could own the stock, but with Bitcoin, that's value that's immediately movable to somebody else. Like, you can pick up your smartphone, go in your digital wallet, and send me $1,000 in Bitcoin, as opposed to the way gold transacts. I don't know if the network that Bitcoin is built on, and I haven't done enough research. I've been following Andre Antonopoulos. I like that guy. Haven't been following him as much lately, so I don't know where they are with the Lightning Network. But I don't know if Bitcoin is ever going to be like currency at the store type of a thing. I think it's digital gold. That's my opinion. But I think the cap is 15 to 20 trillion market cap, which would put us over $1 million Bitcoin. So that was a very long explanation to basically say that I think Bitcoin's value is going to rise when our market crashes, and I think that the value will continue to go up from there, and I think ultimately it could cap out at $1 million based on a $15 trillion market cap. I guess that's what I'm trying to say. So that's my opinion for 10 years. And I hope you were still on there. Cannabis stocks, I don't follow them. I have a friend that does. I like large cap stocks because typically, I don't know. I don't follow them. I don't know much about them. It's just a chart. If you give me one to look at, I'll pull it up, and we can look at Tesla. I'll pull it up and look at it, but I don't really follow them because when I made my list, I just went for really big chip stocks because, again, I'm forward thinking. I'm thinking of the time where I'll have the $30 million trade account. So I'm kind of just sticking with stocks that have a minimum of $100 million a day in price movement. So whatever number of shares it takes to equal 100 million. I think I only have one stock on my list that trades less than 100 million a day. No, two. I think it's Sprint and iRobot. But Sprint has been so good to me since I've had it on my chart. So I don't know, Sprint's a winner. All right, let's look at Tesla. But if you give me a marijuana stock, I'll look it up. Tesla. All right, so this is my daily chart. Blue lines are weekly resistance. And red lines are monthly resistance. So everything points down on Tesla. But the thing about Tesla is it's trading in a range. Now you can't tell that by this chart, but when you pull it out to the weekly chart, take a look at that range that it's in. So hold on, let me zoom out a little bit. So you got this thing going on here. Sorry, that makes it confusing, but you look at this range, right? So the polarity, like the last time price did the opposite, it was going one direction and turned and went the other way, was it was going up and then went down on a weekly level and on a monthly level, that it reversed its polarity. So my bias is to the downside on this stock right now, but at the same time, this bottom area of support has been holding up since last year. So, and then the time that it does decide to go up, if you were to measure like a Fibonacci from here, this would be the point where it does turn and go back up. So I know that's confusing, but it depends on your time horizon. If you're going to trade this long term, like an investment, I really don't know what to tell you at all, because we're still in this range. So it's kind of hard to say. If you're talking about short term within the next, like a swing trade, I would be looking for a short somewhere in here when I got the trigger. And then if you're trading it intraday, I mean, these last, 7, 8, 9, 10 days, it's been going straight up. So I think you've kind of already missed it. I wouldn't buy it here, because you'd be buying directly into resistance. And I don't think that's the best way to do it. It's just a lower probability trade. And what happens is, it could break through here, punch up, and break all through the support and make a new high. And you'll say, oh, man, I missed it. But you didn't really have any, in my opinion, you didn't have any really valid reason to enter into that trade. It's kind of gambling, Like if you entered here, where do you put your stop, for example? Right? So if you're going to buy Tesla, markets turn typically 60 to 80% of the retracement level. So if you're going to buy Tesla, wait till it pulls back down here and buy it down here. Now I'm not telling you that I think that's a good trade. But if you're going to buy it, don't buy it at resistance. Buy it down here where you have some room to be wrong. And these resistance levels are just historical levels where price typically turns. And they're not there to say take the trade. They're there so that don't buy into this. It's just dangerous. Cron, let's take a look. All right, well, obviously it's a newer stock. Started at 21 cents. We're way away from that. So we've only gone up. So what I like to do is trade one wave at a time. So the last time the market went up, made a low, and then went up. So the polarity on this market monthly, big picture, and basically in every direction is up. So all right, so we've started to retrace on price. Right, it's come down 23% or a little bit more. I'm not going to measure it, but we know that institutional money, longer, bigger picture buyers are going to be somewhere in this range down here. That does not mean it will ever come here. Sometimes you get a false turn and it just continues up. So I would be aware, at the $10.48 to $13.61 range, I would be aware in there. And I'd really, if you were going to hold it for a longer term, that'd probably be where I was a buyer. But as far as the weekly chart, that's basically still up too. And the last time you had a major swing on that, I hate it when I do that. One moment. Sorry guys, need to get my chart skills together here. Was here. So you've got some support around $13 to $16. So again, my opinion would be, if it was me, I'm not giving you financial advice. If this was me and I was going to swing trade this, I would look for a buy opportunity somewhere between $13 and $16, and I would look for some type of confirmation for that. If I was day trading this, obviously the polarity is down. And you do the same thing. So like if you're going to trade this and you're going to sell it, hold on. All right, so this is the angle of the current trend. So the polarity is still up, but this is the angle of the down move. If you were day trading this, if you drop down to like a 1 hour chart, you see price has already broke polarity here, and here was your first pullback. So you already missed the first pullback. Let me identify it for you. Right here. See what I tell you about price? Price, it doesn't matter what time frame you're on. Price comes about 60 to 80% when it makes its decision. So in this scenario, price was going up, polarity broke to the downside. The first time it pulled back, going back to the high, look at the 60 to 80% level, there was your trigger to go short. So you missed that trade. And if you're wrong about that trade, you're going to find out around right here. And see what the market did? You got two dojis in a row and then a bullish candle, but that failed and it kept going down. So if I was day trading it, your overall bias could be down because the major let's go back out to the daily chart. Your major support, I took the lines off, but I think it was somewhere around here, $13 to $16 we said. So your major buyers are going to come back in. So you may have some downside potential here, and maybe to the trend line. You may have some downside potential here, and then the push back up. But the polarity on the market's up. So if you're not, if you're not really comfortable going short, then you may want to wait a while and get some confirmation at the $13 to $16 move and see if you could trade it back up. Or longer term, I think it was $10 to $13. There was some more support down there. Otherwise, I'd leave it alone. Like I said, I don't have a momentum set up, and you missed the first trade that I would look at already. So it's kind of too late. No problem, Buns. I hope that helped you answer your question. Anybody else? I can see the chat now. Sorry, guys. That was my mistake before. I thought no one was talking to me. So anybody want me to look at anything? I see there's still a few people here. YouTube is interesting because there's a nice size delay between when I talk and when the actual screen, and I think when you get it. So I'm kind of way behind, or you're kind of behind me. Okay, well, I guess that means we're gonna wrap it up right here. I appreciate you guys joining me tonight. We'll be doing the same thing next week. Please tell your friends, tell somebody. This is I'll look at whatever you want me to look at and give you my unbiased opinion, and I'm sure it can help somebody, I believe. So, let me know if I can help, or bring some people with you so we can talk it through. I'm not selling any products, guys. I'm just here to try and help you out right now. So just let me know. So we'll do it again next week. There'll be more videos coming out during the course of the week. Obviously, we'll do a weekend wrap. Probably I'll put it out on Saturday, I think. And then I'll try and get it out pre-market on Monday, but I've been pretty busy in the morning lately. So it may come out post-market on Monday for the week outlook or analysis. But yeah, that's about it. I guess we'll go ahead and wrap it up. And yeah, Buns, I appreciate it, man. I wanted a larger audience so you guys could kind of challenge me, you know, put me through my paces. But I don't think we're at that point yet. But we're going to build it slow. And just like I said, if you have anybody you know that's interested in stocks and trading and that kind of things, and you know, I could look at other indices too. You know, we're looking at we can look at Bitcoin, we can look at the coin, you know, different cryptos. But I mean, there's commodities in here, there's minis, and we can do currencies, it's whatever. Anything that's based on a chart, we can analyze the chart. So, but anyway, it's good talking to y'all tonight, and I'm gonna go ahead and sign off, and you can look for another video from me in the next couple of days, and it will be live again next week. Don't forget to follow me on Twitter so you guys know when we're going live, and it's at CryptoBitJunky, and I announce it on Twitter. I do it on YouTube too, but I don't know if it sends you an alert or not. I do. I preset when the stream is going to be. Can I ask that question? Does it tell you when I'm going to be live on YouTube, or the people that come here you only know from Twitter? Okay. Okay, cool. I didn't know it did that. So YouTube does send an alert. All right, that's awesome. Thanks, Philip. Appreciate it. All right, everyone. Hey, next week as you're looking at the market, write down all your stocks that you have questions about, and let me know. Thanks, Buns. I appreciate it. Yeah, you do get a YouTube alert. But write down all the stocks during the course of the week, and let's challenge me a little bit. Let's look at a bunch of different stuff. I don't mind. Yeah, that's what I'm here for. I block out like an hour or two. I'm out of the country. I don't have my family here with me. No kids. My wife's not here. So, you know, it's just me. I have time when I do this at night. So, you know, you guys test me. Put me to the test. All right. So we'll get on it next week, and stay tuned for the alerts, and I'll talk to you guys soon. All right. Have a good night.